Traders, how are we? Good afternoon, good evening. Trust everybody's doing well and had a great start to the week. Lots happening out there. Busy market, especially today for intraday traders. Those that have the ability to drop down to the lower time frames and look for momentum-based positions, having a field then this week, I think it's going to be a fantastic week. Chart of interest that's going to suit all trading styles. For me personally, it's cable. Pound has been interacting and is now playing above the 130 level. I've had two entries at this so far. One closed for a small profit, the other stopped at break even. Now, we've got to look and we've got to understand the market sentiment and the position we're in. I always suggest that you build scenarios that could play out for perhaps each direction, subject to there being some agreement. Now, we are in a position where we are looking at potential risk on sentiment in the near future. We're also looking at potential dollar weakness. Now, taking that into consideration and where pound is positioned, it's in an ideal area to look for a reversal. My first entry was a limit order just above 130, which unfortunately got stopped out this morning at break even. I managed in fact Friday we took that position. And it got stopped out this morning at break even. I personally don't like holding trades over the weekend, so it was around 30 or so points in front. I brought the stop loss to break even Friday evening, and of course this morning it just pulled back slightly. But look, there's another opportunity to get in, and on the trading floor we have caught a momentum-based position long, in and out nice and quick, smash and grab start, just while we wait for this market to materialise. Now, as you can see, it's not quite a double bottom. We have formed a lower low, so we have to take that into consideration. And we also have to understand that trading this style and system is slightly aggressive. So those of you that were in from a limit order, you may have had your stop loss below the weekly pivot at 29.80. You may have used an ATR to understand the average true range and what the average bar size is over the last 20 or 50 points, bars in fact, and that would have given you a reasonable area to position stop loss. Those of you that are triggered at 130 and your stop was in a reasonable position, you would currently be up around 36 points with tons of reward ahead. My first initial target is the 133 mark, so we're looking at 300 pips up for play, especially in the near future. Past that, you can start to look at the 35, 37 level, which definitely come into interest down the line. Now, I just want to take your eyes over to a seasonal chart of pound. Now, pound typically creates a bottom end of March coming into April. And as you can see, this blue line is the last 46 year. The weighted average, the orange line, is showing how aggressive price moves in and around this period as we look for pound buyers to enter the market. Now, seasonality isn't enough for us to pull the trigger, but it definitely supports us in creating our correct watch list. We then look at understand the weight of the commercial buyers coming into the market, as well as, of course, technicals and price action. Price action is the only leader in the market. If price action goes, we follow. Now, understanding that we're now seeing buyers step into the market last week, and of course today we've seen buyers step back into the market. I personally believe there is room for a buy stop pending order at the high of tonight's candle. I would suggest putting it in and around, the current high right now is 56, at 1.30, 56. Subject to price staying and behaving in a similar position it is in now, you might want to buy a stop order at perhaps 130.60. I would suggest your stop loss coming in at 129.80. So you've got around 80 points worth of risk, and again for a potential gain of 300. So you're looking at positioning where your stop is and so on. You're looking at over a 2-to-1 risk to reward ratio. As I said, price can move onwards and upwards. This bullish push usually starts to top out in and around the start of May. So you've definitely got a couple more weeks worth of buying to take into consideration. This can also move into May as well. Now, for those of you that are trading intraday style, you've got the ability to trade throughout the daytime. Most of the time we wait for price to break the 200 moving average to give us a clear and more confident approach that we're now stronger than an average price. I'm going to put a level in at 30.50. For those of you that trade intraday with me, you'll know that we use our blocks of 50 to target and manage our intraday momentum-based positions. Now, round numbers is something I stick to also. So 130, 130.50, 131, 131.50 are all intraday levels I'm going to be keeping a very, very close eye on. So what I want you guys to focus on there, ignore the range that we're currently seeing at the minute. I want one bullish cycle creating a new higher high allow the buyers to show the direction they're heading in, then pull back, and if we can come back into that 30-50 mark, bullish engulfing candles, I'll definitely be looking at a potential buy stop pending order, or perhaps a direct to market trade depending on how strong momentum is. Now by that time the 200 moving average may move slightly lower, you may get a break, pull back, and bullish price action can form in here. So always take the 200 being our slowest moving average into consideration, but we are looking for a bullish cycle above 130.50 to get us into that move. Now, as I said, there's tons of upside opportunities. Another market to take a look at is Pound Kiwi. Pound Kiwi again is in a position of interest. We're starting to see price show us potential, and if I show you from a daily time frame, you can see that yes, we're in a phase 2 and we're above 190, which was again a level that I did, in fact I felt a lot safer buying above. And you can see from a weekly perspective here, we had 10 weeks worth of selling, so we're naturally due that pullback. Yes, we had lower support levels here, that 180.80 mark, a fantastic level for a buy stop, or in fact a buy limit order. But again, we're now positioned and we're due that pullback. So understanding the weekly needs of phase 2, the daily is already showing its way. As we move lower to a 4-hour time frame, you can start to see the market is showing we're moving up to that 200 moving average. So we've got another 130 odd pips of interest. If we get a 4-hour pullback after a 20 and 50 moving average crossover above 190, that will be my 4-hour opportunity to trade. And I think we'll get that first. So Pound Kiwi, definitely look at a 4-hour pullback into 190 and a move back into the 200 moving average. And then again, as we understand the pound's supposedly strong during the seasonal bullish period, we can then look to crack on and continue working our way into further trades. Because we've caught this move nice and early, this is when we have the ability to scale in, take multiple trades in the same direction, only using our profit as risk moving forward. It's a skill that we teach some of our more advanced traders and students, but definitely something I would suggest taking on board if you are looking to see high reward trades using minimal risk. If we look at Pound Aussie, again, Pound Aussie's in a very, very similar position. Now, we're going to use that 176 mark as an area that we want to be above, just to confirm that strong buyers are going to dominate and take control. We've got strong selling, pullback is exactly what we're due. So understanding we're due a weekly phase 2, as you can see the daily isn't showing too much at all. We are seeing strong buyers come back into play. But as I show you this 4-hour time frame now, we're now seeing price confirm a head and shoulders reversal pattern. Our 20 and 50 moving average is about to cross. So I want you guys to analyse this 176 mark. I want you to look for 1, 2, 3, bullish entry over the top, and back in we go. Couple of scenarios there, guys. Look, this is just 3 charts: cable long, Pound Aussie long, and Pound Kiwi long. And I want you to really take that into consideration now. So start to monitor what markets are strong, what markets are weak. Put yourself in a position where you can start to weigh up and understand where the momentum is. Once we get momentum, obviously take action, pull the trigger, get into those positions. Lots of other opportunities out there. Stick to the rules, play it safe, guys. Don't overdo it. If we do start to see the dollar market weaken off, risk on sentiment, then again, pound dollar long, you've got lots of upside potential there. Those of you that are end of day traders, again, your sport for choice. I think I put around 15 opportunities over the last couple of days that I want you guys to pay attention to and definitely stick to the rules when looking to take action. Pound Kiwi is one I'm going to show you here. We've come off support. Stochastic's shown us that we're oversold. Sellers are exiting the market, buyers are creeping in. We've had that 5 and 10 cross, so a buy stop order at tonight's high for all of this upside potential. We're looking at 100 points risk for over 1,400 points worth of gain here. If we're taking the previous move into consideration, after the crossover, it took us 26 days for 1,200 pips. So again, we're looking at the same behaviour back up to the upside, in line with seasonal pound strength. Good stuff, guys. You know where we are if you need us. We look forward to seeing some of you at our next couple of events. Or of course, we've got tons of webinars and live trading streams this week. Get in contact if you do need any additional support or help, guys. But look, all the best. Have a fantastic trading week, and we'll see you guys soon.